Every hour, all the news, the market moves, and the movers and shakers behind the headlines. Himalaya presents Active Market Roundup, brought to you by the Himalaya range of health and beauty products.
E, brought to you by Microsoft, providing software for the agile business.
Tonight on E, no end for the troubles for corporate America as another U.S. telco, Quest Communications, comes under government scrutiny. The implications on telcos with Balaji Buvarahan of Frost & Sullivan. Earnings previews and reviews, including a look at the upcoming numbers of software giants Microsoft as well as Oracle. Plus, China's electronic industry is booming. We'll find out what it takes to turn that country into a high-tech powerhouse. Hello, good evening, everyone. Welcome to E on CNBC for your daily dose of all things tech. I'm Keith Liu. Well, first up, telecom equipment maker Juniper Networks reporting second quarter earnings later tonight, and the consensus is for Juniper to post a loss of a penny per share. Well, investors will be watching for how badly Juniper is being affected by WorldCom amid an industry that, of course, is already struggling to cope with a prolonged slump. Now, WorldCom, which is embroiled in a $4 billion accounting scandal, ranks amongst Juniper's largest customers, making up for 14% of Juniper's revenues for fiscal 2001. Well, another of its client, Quest Communications, also under probe for accounting irregularities, and it looks set to deal another blow to the battered equipment maker. Shares of Juniper in pre-market trade right now at $7.13, slightly above the close. Well, news that Quest is under criminal investigations by federal prosecutors knocked 41% off its share price and sent shivers through U.S. markets overnight. Its shares plunged into the pits, a low of $1.53 before closing down 32% at $1.77. Well, in June 2000, remember, its share price was at a high of $67. Now, the fourth largest domestic phone carrier in the U.S. is being probed by the Securities and Exchange Commission for its accounting practices. And after the WorldCom debacle, another telecom company under government scrutiny is the last thing the telco industry needs. And that weighed down on telecom-related stocks across the board. In Asia, as you can see there, Japan's top mobile carrier, NTT Docomo, seeing its share price hit a 5-month low. Investors are concerned over its growth prospects in the Japanese market, which is highly saturated. Now, adding insult to injury, former high-flyer Nortel Networks will be removed from the benchmark Standard & Poor's 500 index, the S&P 500, effective July 19th. Well, once the pride of Canada's tech sector, Nortel is now buried in nearly $5 billion worth of debt, and it's undergoing massive layoffs and other restructuring measures to streamline its businesses. Well, Nortel shares got dumped big time as well to hover just above its 52-week low. In pre-market trade, it's just above 0.01 cent above the close. While faced with weak balance sheets, rock-bottom stock prices, high debt levels, oversupply of capacity in the networking sector, and now shady accounting practices by some of the largest players in the sector, what could get worse for telecom companies as well as the vendors, the telecom equipment providers? Well, Balaji Buvarahan, manager for consulting technology practice from Frost & Sullivan, he joins us here to give us his outlook. Balaji, good to have you here as always. Now, as a matter of disclosure, this is something new, of course, that we'll be doing from now on. I mean, your company works with a lot of telecom equipment providers, so we'll just put it right there, disclose that right now.
Okay, you want to name the companies who associate
obviously
with?
There are many.
Almost all the vendors, because we are in the research field and consulting works, almost all the vendors we work along with, but not in the financial side.
Okay.
What we typically do, work on the market aspects and how the market fares and how they promote their product and services, and basically more on the competitive intelligence side. So we almost know in and out of all the market participants.
All right, so that's for our audience there, actually. Okay, if we were to look now then at the sector, I mean, we've got Quest, you know, this is the latest big one. What could really get worse for telecom equipment providers?
As you see, all the big players are struggling to make their balance sheet look a little more rosier. Maybe the ways and means of doing things are laying off people or laying off new products and services that they never taken up in the network market. Again, as you see, companies are going bankrupt almost every other week. So it's really strange how even the big guys like a Lucent or a Nortel, even to an extent Cisco, are going to cope up at this kind of environment. So only thing which they can do is to increase their revenue base in other aspects in terms of maintenance or the service levels which they can give it to the existing client base, because most of the other people who get the benefit, maybe customers or the network providers, also undergoing a lot of problems. So it's very difficult to solve in a short span of time. I think this is going to prolong at least for the year from now. To see any kind of green features.
Right. If we were to look, though, at the telco carriers, I mean, in the US and Europe, obviously they have a lot more problems compared to telcos here in Asia. So can the equipment providers, perhaps look towards this market and say, there are like certain growth areas to really tap into, or have we kind of like maxed out on all the opportunities?
Asia is still was and is the darling for most of North American as well as European vendors. But as you see, if you go by market sector, fixed line market is almost saturated in most of the markets which you are talking about. Mobile is one of the greatest growth sector. But the recent past, in the last 1 year, we are seeing a slump in growth, especially on the data communication side as well as in the mobile communication market. Maybe if at all the market revive, I think Asia will be the first market to pick up in terms of adopting network infrastructure or additional investment on the telecommunication front. That way it's really great. Again, countries like India and China, as everyone is looking after, because there is the penetration level in terms of mobile as well as the landline is comparatively very low to the other markets. So it provides an opportunity.
But if we look at like long term at these companies and the kind of technologies they're investing their research into, which are some of these companies that will probably hold out in the long run?
Switch makers like even Lucent, Nortel still have a chance in Asia. But one thing to remember, even Cisco's, everyone has a fair chance in Asia. But one thing to remember, what is the revenue contribution from Asia to that company? Because the kind of scandals which you are seeing, the kind of massive financial needs those companies have, it's far beyond what Asia could satisfy. So that is, we have to keep into account. In that case, Lucent, Nortel to an extent, Siemens, Alcatel, Ericsson, Cisco, the front and the Nortel hand.
Still the established names.
All the established names will have a great market. Countries like China, we have a heavy competition from the local front. They have to face it. But so overall, there is a positive note in Asia. If things goes well.
Thanks so much for joining us tonight, sharing your thoughts with us there. Balaji Buvrahan from Frost & Sullivan. Well, in the midst of the telco tumble, South Korea's largest telephone company loses its leader. Lee Sang-chul left his job as KT Corp's chief executive for the post of info minister. The nation's president, Kim Dae-jung, tapped Lee as the information ministry's top man as part of his cabinet reshuffle. So what does this mean for the telco industry there? CNBC's market insider Eunice Yoon has more from the newsroom. Hi, Eunice.
Hi, Keith. Well, Lee Sang-chul has 6 months to make his mark on the telecoms industry there, but the jury is still out on whether that's possible. Some believe that the limited time frame will prompt Lee, who has had political ambitions before joining KT, to leave his legacy by easing regulations, pushing for a rollout of third-generation wireless services, broadband, as well as wireless LAN. Others, however, aren't so certain, saying not a lot can really be done in 6 months. But most agree that with KT Corp's ex-chief in the info minister's chair, the government will likely put the pressure on SK Telecom to sell down its holding in KT, of which it has a majority stake. Now, the government has been pushing SK Telecom to reduce its stake in KT on concerns that the wireless leader would eventually dominate the nation's mobile as well as its fixed-line businesses. KT Corp's then-chief Lee had suggested alternatives incentives to SK Telecom, for example, to agree to a share swap, since KT Corp also holds a stake of a similar market cap in SKT. But at that time, SKT had snubbed the idea. Let's take a look now at shares of both of these companies today falling. Korea Telecom by 3.9% and SK Telecom by 2.6%. That's it from me. Back to you, Keith.
Interesting developments to watch out ahead then. Thanks so much for that report. We'll definitely get back to you, of course, with the latest updates. More e-news coming up after the break. Plus, we'll find out what is driving China's electronics and IT sectors. Analysis with Michael Liu, editor-in-chief of two China-based electronics trade publications.